Hello, welcome to the European Open briefing for Friday, November the 25th. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So we are seeing the US dollar easing back a little bit today, although this was only after it made another 8-month high earlier in Asian trading. US treasuries are continuing to rally, although they've eased back a little bit now. Commodity currencies, we're seeing a sharp rebound as the dollar falls back slightly. In particular, the Australian dollar is up around 0.5% today due to higher iron ore prices. Gold is also rebounding, although that's only after it made another 9-month low just a few hours ago. Emerging market currencies, on the other hand, they're still under a lot of pressure. We're seeing the Turkish lira and the Indian rupee make fresh record lows. So let's start now with the dollar-yen pair. We can see earlier today it touched a new 8-month high of 113.89. It's since dipped below the 113 level. Although it's still up sharply over the week, and over the past 3 weeks since the US election, it's up around 10%, and that makes it the biggest 3-week gain since 1995. The dollar index is holding it's near the 13.5-year high. It's currently around 101.5. We're still seeing US Treasury yields benefit sharply from those expectations that the Trump administration will bring in big tax cuts and higher infrastructure spending, which would ultimately lead to higher rates in the US. The US markets will reopen later today following yesterday's Thanksgiving holiday, although we will likely see fairly quiet trading as there's no major data releases today. At least not in the US session. Let's move on now to the Australian and the New Zealand dollars. Both of them are up around 0.5%. The Aussie is up just under 0.6%. The Australian dollar is supported by higher metal prices, in particular iron ore and also copper, both of them have been rallying, both on expectations of higher spending, infrastructure spending in the US, but also from higher demand in China as well. The Kiwi today benefited from strong data out of New Zealand. We can see here that the Australian dollar has actually been gaining over the past week due to the rally in metal prices. The Kiwi has only more recently started to head higher again after touching a 4-month low yesterday. And also, it's also worth mentioning that both the Aussie and the Kiwi, although they've been falling sharply against the US dollar, they are in fact significantly higher versus the Japanese yen. Japanese yen has been broadly weaker against not just the dollar but also against other majors following the sell-off in safe havens assets after Trump's election win. Let's have a quick look now at some emerging market currencies. Here we have the Turkish lira and the Indian rupee. Both of them came under pressure in line with other emerging market currencies. The Turkish lira hit an all-time low yesterday, and this was after the European Parliament voted to freeze Turkey's EU membership bid, so that had quite an impact on the lira. It's firmed a little bit today, and if you look at the purple chart, which is the Indian rupee, that's gained, it's firmed a little bit today, that's mainly due to the Indian Central Bank intervening to support the rupee. Let's move on to commodities. Gold rebounded quite sharply, although that only came after another 9-month low of $1,171.21 an ounce. It's currently trading around 1,185. Gold has fallen sharply since Trump's win, in line with other safe haven assets. The negative impact apart from US yields, is of course we have a big rally in equities, particularly in US equities. So we're seeing reduced demand for gold, although given the both the dollar and US Treasuries easing back today, gold has managed to make that rebound. Oil, on the other hand, hasn't benefited as much because the reports out today suggest that Saudi output is up currently, and that's weighing on prices. Even though we are likely to see some kind of a deal next week between OPEC members and potentially non-OPEC members as well. Although in the near term, crude oil prices are being weighed down by those reports of rising output in Saudi Arabia. Let's have a quick look before we finish with today's economic calendar. We did have the New Zealand trade data. We can see their exports rose from the prior month in October. Imports were slightly down, so the overall trade balance was sharply lower in October. We also had Japanese inflation data. The core CPI, which is headline CPI excluding fresh foods, that was in line with expectations at minus 0.4%, slightly better than the previous month's minus 0.5%, although the Bank of Japan has still some way to go before inflation does rise to the 2% target. And that didn't have too much of an impact in the markets, as we know the main effect at the moment is, of course, what's happening with the dollar. Coming up later after that, shortly, we will see some UK GDP data. It's going to be the second estimate of the third quarter GDP figures. It's expected to be confirmed at 0.5%. We're also going to have business investment figures in the more detailed release in the second estimates. It will be interesting to see whether or not business investment does come in line at 0.6%. 0.6% isn't too bad. If it comes below that, then it will likely be a sign that the Brexit vote has had a much bigger impact on business investment than expected. Later in the US session, we don't have too much major data. We do have some advanced goods trade data, as well as the market services flash PMI. But that's it for today. Thank you very much for watching and have a great day.